Welcome to the Deep Dive, where we unpack the stories behind the numbers. Today, we're diving into KULR Technology Group's Q2 2025 earnings call. And if you're looking for a company that's really shaking things up, well, this is definitely one to watch. We're going to explore KULR's surprising first ever quarterly profit, their, well, audacious Bitcoin plus Treasury strategy, and this ambitious pivot towards product-focused growth. Some really cutting-edge tech here.
Yeah, what's truly fascinating, I think, is KULR's unconventional approach. I mean, they're leveraging a volatile, digital asset like Bitcoin to provide significant capital and stability for what is, let's face it, a very capital-intensive growth story. This isn't just some side project. It's a really strategic bet. Could redefine how deep tech companies fund their future, but it also introduces unique financial intricacies we need to unpack.
That's a crucial point. It really highlights the complexity, doesn't it? Assessing a company like KULR. So, okay, let's jump right into the results snapshot. KULR delivered some headline numbers that certainly got people's attention. They reported their first ever quarterly profit, GAAP EPS of $0.22. Now, that's a significant beat, especially when you consider analyst consensus was actually for a loss. And revenue hit a record, $3.97 million. This is a substantial 63% year-over-year increase. Beat forecast by about 14%. Pretty solid.
It is, but it's important to add some nuance there. While a profit is definitely a profit, this was largely driven by mark-to-market gains from their Bitcoin holdings. Just to be clear for listeners, mark-to-market basically means the paper value of their Bitcoin went up a lot during the quarter, even if they hadn't actually, sold it yet. So it's a different kind of profitability story than you might usually see from a tech company. More about asset appreciation than, say, direct operational earnings.
Right. Operational versus asset value. Big difference. And the market reaction to this news, wow, it was quite a roller coaster. We saw some initial caution, right? Slight dip in regular hours just after the call. But then things took a dramatic turn. The stock soared over 160% within 10 days and over 137% over 30 days post-earnings. That kind of volatility after an earnings report, it's definitely something. What do you make of that? The initial dip and then that huge surge?
Well, it suggests investors are really grappling with this dual nature of KULR's business. The initial dip might have been, a knee-jerk reaction, maybe to the complexity or realizing the profit wasn't purely operational. But that subsequent very strong rally, that tells us the market quickly started to appreciate the implications, the implications of that fortified balance sheet, the long-term potential of their product pipeline. Seeing the Bitcoin as a significant capital enabler is really testament to the belief in their strategic vision, even if the means are unconventional.
That dramatic rebound really grabs your attention, definitely. But okay, to understand what fueled it, we need to peel back the layers a bit. KULR's financial picture, starting with the heart of their strategy, that $1.22 GAAP EPS and their unique Bitcoin plus Treasury approach. So they now hold over 1,035 Bitcoins, worth roughly $120 million back in early August. That contributes to a substantial $140 million balance sheet in cash and Bitcoin. That's quite a war chest.
It absolutely is. And leveraging Bitcoin like this as a core treasury asset, it provides immense capital stability too. It lets them accelerate investments into their core technology. They've even secured a $20 million credit facility with Coinbase, specifically to fund more Bitcoin accumulation. This really shows their deep belief in Bitcoin, not just as an investment, but as a strategic asset, like a hedge against fiat currency erosion and a foundation for building this portfolio of frontier tech. The key thing here, I think, is that KULR isn't just holding Bitcoin. They're really stress testing a new model for corporate finance, where, a volatile digital asset underwrites long-term capital-intensive tech development.
Okay, so the Bitcoin strategy gives them a capital boost, strengthens the balance sheet. Makes sense. But it's not the whole story for operational performance, is it? I noticed gross margin was 18%. That's down from 24% year over year. For a company in such an aggressive growth phase, you might expect margin expansion, maybe. What operational pressures does that contraction reveal?
That's a really sharp question. Yeah. The decline was primarily due to, two main things. First, unanticipated labor hours needed to complete some complex technical projects that points to maybe some inefficiencies in scaling up. And second, the price of Bitcoin affecting their Bitcoin mining margin, which adds another layer of external market volatility. We also saw operating losses increase to $9.45 million from $5.33 million year over year. So this raises an important question, right? While Bitcoin gives them a financial cushion, the core operational profitability still faces some headwinds. The increase in SG&A to $6.94 million and R&D expenses to $2.44 million. That reflects planned investments for growth. big investments. But it also highlights just how capital intensive this product pivot really is. That's where those margins are feeling the squeeze.
Like the spending needed for the pivot. And speaking of Bitcoin, it's not just holding. They're actively mining it too. That adds another dimension, financially and operationally. Can you walk us through their mining operations? What does that actually involve for the business?
Certainly. So KULR's mining ops currently maintain a hash rate of around 900 petahash. Now, for listeners maybe less familiar, a petahash is just a measure of computing power. How many quadrillion calculations per second their gear can do to mine a Bitcoin. And they have an ambitious target. Reach 1 exahash, that's 1,000 petahash by this fall. So rapid expansion plan there. A key advantage they mentioned is their blended power cost below 4 cents per kilowatt hour. That's pretty good. And their cash cost per Bitcoin for mining is about $102,000. These are very competitive figures. Suggests they're a fluent miner, so it adds another layer of value creation beyond just buying and holding Bitcoin.
Okay, so that's a serious commitment on the crypto side. But beyond Bitcoin, KULR is in the middle of this huge transformation, moving from mostly a design and testing service company to a product-focused entity. You mentioned such a diverse set of applications earlier, deep space, exoskeletons. How do these seemingly disparate ventures under the KULR One platform and even physical AI, how does it all tie together strategically? What's the common thread there?
Or the advantage of such a broad focus?
Yeah, that's the million-dollar question, isn't it? What's fascinating is the sheer range, but the common thread is fundamentally about advanced thermal management and battery safety. These are critical across all these frontier technologies. The KULR One platform is central, leveraging their core expertise. We saw the KULR One Space A1S 400 passed NASA's acceptance for 2LS793 certification for the Artemis program, literally going to the moon. Then they demonstrated a ballistic-proof K1G battery. It can withstand an API-round impact, that's for defense applications. And they delivered a subsea pressure-tolerant battery pack engineered to withstand 6,000 to 8,000 psi for deep water missions. That's a market projected to hit $3.5 billion by 2035. So
Significant.
wow, and they're expanding the KULR One platform even further. Plans to introduce KULR One Air for UAVs, battery backup units for industrial telecom, data centers later this year. It really sounds like they're finding critical power and thermal challenges across high-growth sectors, and then just applying their foundational tech. Precisely. And beyond batteries, they're moving to physical AI with that 7th-gen EXIA exoskeleton developed with German bionics. That's a really notable move. Takes them into human-machine interaction. Early customer feedback. Overwhelmingly positive, apparently. And it's expected to start contributing to revenue by Q3 2025, targeting retail distribution centers, logistics, food service, this kind of, radical pivot from services to product across such diverse cutting-edge fields. It's incredibly ambitious. It's a bit like trying to land multiple rockets at once, each with a different payload. The potential rewards are huge, but so are the execution challenges.
Definitely sounds ambitious. And to support this growth, and maybe attract more investors, KULR did a 1-for-8 reverse stock split. Just briefly, a reverse split reduces outstanding shares, boosts the share price proportionally. Often done for listing requirements or attracting institutions. Management was clear, though. They said this was voluntary, aimed at a higher share price for institutional investors. Unequivocally not done to regain NASDAQ or NYSE compliance. They also entered into a new $300 million ATM agreement. What exactly is an ATM agreement here?
Right, an ATM at the market agreement. It's basically a flexible way for a company to raise capital. They can sell newly issued shares directly into the open market over time. Instead of doing one big traditional offering, it gives them access to capital as needed without the pressure of a fixed price offering, which could be really strategic for a company like KULR with dynamic capital needs. A facility like this, especially $300 million, gives them significant financial flexibility.
Okay, flexible funding. Got it. Now, shareholders brought some pointed questions to the call, especially around communication and maybe some past promises. Given all these big strategic shifts, how effectively did management handle those concerns?
Well, management certainly acknowledged there was room for improvement in communication, particularly about the reverse split and striking a better balance between updating on the core operating business versus the Bitcoin strategy. CEO Michael Moll committed to more consistent updates, which is, a positive sign for transparency. Regarding a short report from April 2025, those usually bet against the company and outline weaknesses. Management took a firm stance. They said it's not their policy to engage in what they called an endless battle of opinions, and they affirmed they aren't aware of any class action litigation, so basically pushing back firmly on that.
Okay, standing firm there. What about growth questions? There was a mention of a 2023 expectation for KULR One to generate over $200 million in revenue by 2026. That's a huge target. What was the explanation for the apparent delay in hitting that ambitious projection?
Yeah, Michael Moll clarified that. He said the initial cell provider's manufacturing strategy changed, and battery price volatility also significantly impacted market opportunities. External factors that can definitely disrupt plans. However, he did express renewed confidence in KULR One's future growth. He highlighted the advanced suite of products they've now developed and delivered. So the suggestion is they've maybe overcome those initial hurdles and are better positioned now.
Right, adapted to the market changes.
Yeah.
And what about that ATM agreement we just talked about and the shareholder dilution concerns that often come with selling more shares?
The CFO, Shawn Canter, he reiterated that the ATM has been a very strategic tool for them, used primarily to build up that Bitcoin treasury and strengthen the balance sheet. With about $140 million in cash in Bitcoin, he emphasized they're in a strong position now, strong enough to invest heavily in their battery and robotics businesses, aiming to be one of the few profitable examples in the U.S. market as they make this transition to a product company. So the message was clear. The dilution serves a specific strategic purpose for long-term growth.
Okay, so putting it all together, what does this mean for you, the investor, looking at KULR's path forward? It's complex, high-stakes stuff.
Yeah, the deeper insight for investors, I think, is this. KLR is a really fascinating case study. Can a fortified, even if volatile crypto treasury truly insulate a company from the pressure of immediate operational profit? Can it let them chase these audacious long-term product visions? It really makes you question if traditional valuation metrics even apply here. KLR's story is, well, it's audacious financial strategy meeting ambitious product development. That market reaction, initial caution, then the big rally shows investors grappling with this blend, Bitcoin's strength versus the execution risks of this rapid, diverse product pivot. But the overall sentiment seems to be leaning bullish now, driven by the transformation narrative and that strong Bitcoin foundation, even with the underlying gross margin pressure and those increasing operational losses that, still need to be tackled operationally.
And management is targeting $20 million in annual revenue for 2025. Aiming to double 2024. They expect that growth trajectory to sustain, maybe even accelerate, into 2026. What key catalysts should listeners be watching for to see if this vision actually plays out?
Okay, key catalysts. Definitely further commercialization milestones for the KULR One battery products and the EXIA exoskeleton, especially as they start actually bringing in revenue, updates on the Texas Space Commission grant, other defense aerospace contracts. Those will be important signals. Shows are landing those big clients. Of course, Bitcoin market performance will keep influencing the balance sheet. Can't ignore that. And importantly, watch for the new investor presentation expected this fall. That might offer more clarity on strategy and outlook. The long-term vision is clear. Transform from a niche thermal services provider into a diversified, product-centric company, rooted in cutting-edge battery tech supported by that Bitcoin treasury. It's a high-wire act, no doubt, but potentially with very significant payoffs.
All right, definitely one to watch. Now it's time for our This Is Not Financial Advice segment, keeping KULR's unique, volatile, yet potentially explosive story in mind. What's an outrageous but plausible trade idea you've been thinking about?
Okay, outrageous but plausible. Given KULR's hybrid model, how about this? A long-dated, deep-in-the-money call option on KULR, expiring, say, mid-2026. Combine that with a short position in a pure-play Bitcoin miner, one that lacks diversified product lines, the outrageous part. Betting heavily on a tech company with current operational losses and this massive, complex pivot. But the plausibility, that comes from KULR's fortified Bitcoin treasury. It provides this unparalleled capital base for rapid product commercialization in really high-growth sectors, space, defense, AI, robotics. So effectively, you're creating a synthetic play. Betting on the Bitcoin plus tech innovation combo outperform a business that's solely dependent on Bitcoin, especially as KULR targets that one exahash by fall and the EXIA exoskeleton starts contributing revenue in Q3. It aims to capture upside from KULR's unique catalyst while maybe hedging a bit against broader Bitcoin swings. It's really a wager on the future of corporate finance meeting deep tech innovation.
Interesting structure. Definitely plays on their unique setup. Okay, that wraps up our deep dive into KULR Technology Group's Q2 2025 earnings. We've seen a company leveraging a truly unique Bitcoin strategy to fund an ambitious pivot towards product growth in critical tech sectors.
Indeed, it's a compelling blend, isn't it? Financial innovation and deep engineering, facing both significant opportunities and, let's be honest, the inherent challenges of scaling multiple new ventures all at once. The path ahead, it'll be watched very closely. How effectively can they translate that strong balance sheet into sustained operational profit and product success? That's the key.
Absolutely. A company transforming its identity right before our eyes. It really presents a fascinating challenge to traditional investment analysis. We encourage you to think about this. How might this hybrid model, a tech company backed by a big crypto treasury, how might it redefine valuations and investment strategies going forward? Could it impact traditional tech growth models? Could it be a blueprint for other ambitious startups? We'd love to hear your thoughts. Thank you for joining us for this deep dive. As always, the information shared here is for informational purposes only. It is not financial advice. Please do your own research. Consult with a financial professional before making any investment decisions. Until next time, stay informed.